That's all I had, so we're not talking about Mike's Hard Seltzer, and I'm not an alcoholic. It just so happened that's all I had in my refrigerator. Happy Friday, everybody. It's been a long time since I posted, and boy, have I missed you all. Welcome to the Financially Fit channel. This is the channel where we get you on the right side of your trade or investment. Today we are going to talk about, well, in my opinion, the best reopening stocks. Why are they the best reopening stocks? Well, because when you think about a reopening, for some reason, Wall Street wants you to think about airplanes and cruise lines. Me personally, I think about popping a cold one with my next door neighbor, going to the game, having a brew. So today we're gonna break down two beer stocks that honestly have been lagging the market and have some pretty good upside. So pop open that cold one, because it's the weekend, and cheers to Bud and Coors. That's all I had, so we're not talking about Mike's Hard Seltzer, and I'm not an alcoholic. It just so happened that. So the two stocks we're going to talk about today is going to be Anheuser Busch and Molson Coors. From a size perspective, they're not really comparable. Unfortunately,
my mother's coming.
That's what she said. No, unfortunately, Coors doesn't stand a chance, as Anheuser Busch is roughly 11 times the size of Molson Coors. But does that make it a better buy? Well, now we have to really dig deep to figure that out. First, let's start out with their surface level stuff. And this is what I do before I buy a stock. I look at the surface level. So just the surface level, Anheuser Busch has roughly $112 billion market cap, which makes it pretty massive in the beverage industry. Along with that, they have about a 1% yield, which is fairly low, and have a forward PE of 20. While Coors, ticker symbol TAP, is a hair below a $10 billion market cap, has a forward PE of 11.9, and is pushing a 3% yield. So just off the surface, to me, Coors is undervalued, has a better yield. So just off of a quick scan, we realize that Coors is probably undervalued and has a better yield, so it has two things in its favor right off the bat. Anheuser Busch is an ADR, which means that it's an American depository receipt. It is a foreign country. It is a foreign company that's allowed to trade on the US stock market, so there's usually fees tied in with that. So a size comparison, once again, if size means all, well, then that stinks. I always prefer quality over quantity, but hey, I guess it's all in the eye of the beholder. With that being said, Anheuser Busch has roughly 500 brands, which is just astronomical, while Coors has a cool 80 brands. As you can see from a pure number standpoint, a lot more to be offered with Anheuser Busch. But does that make it a better business? Not necessarily. As we can see, there's probably good reason why it trades for a higher multiple or a higher PE, but we really need to dig down into the numbers to figure out if management is making good decisions with their finances, and really what does their balance sheet look like? Not only what their balance sheet look like, what is the outlook of the company for the future? Now, as we all know, the beer commercials back in the day were probably some of the best. I mean, Bud, Weiser. Everybody remembers those, that's probably in their 30s. And obviously everybody knows the real American hero commercial as well. Bud and Bud Light I really enjoy, but personally I always lean to Coors Light, and Miller Lite, which is all under the same umbrella of TAP, T-A-P, Molson Coors. Personally, my personal preference, my opinion, just my taste buds, is I do enjoy a good Coors. So personally, that is what I would lean towards. But does that mean I would invest in them? Not necessarily. I want to make sure the numbers are good, and I always line up my technicals with the fundamentals. If you watch this channel, you guys know this. So let's just see which company really is worth investing in. We look at Anheuser Busch's financials. Right off the bat, we see that they have a PE ratio of 19, which is actually pretty fair. They have revenue of $51.4 billion, revenue growth of 7.55%, and a gross profit of $29.9 billion. Let's just call it $30 billion. They have $7 billion on their cash balance sheet and about $90 billion in debt, and they are free cash flowing after dividends paid, and they are free cash flowing $9.75 billion. They're just getting below 20%. They are cash flowing just below 20% of their revenue. Pretty solid, actually very solid numbers overall. Return on assets is 3.89. Not too impressed with that. Return on equity is 9. So overall, they're not doing a good job with distributing their cash, and they're not doing a good job. They're doing an okay job on their equity position. At these prices, I think you're getting a fair deal with Anheuser Busch. I wouldn't say you're getting a bargain, and I wouldn't say that I'm just kind of nothing really. I don't feel like you're getting a great deal, but it's a good deal. $9 billion in cash flow, and them having an enterprise value of $200 billion, and their current market cap is $100 billion. I would say that they probably have a 10 to 20% upside in the stock. So overall, I'll give Anheuser Busch 1 thumb up. Look at Molson Coors. We see that their revenue was down by 0.5%. They did almost $10 billion in revenue. Their net income was negative, and their total cash is $1.3 billion, and they have a total debt of $8.5 billion. Return on assets is even worse than Bud, with 3.5% return on assets and negative 4.1% return on equity. Cash flow was $740 million, which is pretty good. The free cash flow at $740 million is still in a good area to keep the dividend safe, as the revenue was $9 billion. So I don't see any concern there. I do have concern, however, with their cash position. Would definitely like to see them grow that and possibly and obviously do much better on their return on equity and assets. But as we all know, with the shutdown of the economy, it definitely impacted a lot of companies. So really, it's two different stories here. You have one story of Bud, which is probably more of a safer play, if you will. I think that with their cash and them growing revenue, it's most likely a safer play, where I feel that because the forward PE on Coors is so low, that there is a little bit more risk reward with Coors, and you do have a higher yield. So personally, it really depends on what you want to do. If you want that larger gain upside, I do think Coors will give you that. But if you want more stability, I think you go with Anheuser Busch. I know that Coors has invested money into the seltzer side of things, and they are coming out with more products to accommodate that crowd. So personally, I think there's more upside to Coors, as when I dived in a little bit more, I can see why they have been losing money. And when I looked at their back half of their quarterly report, most of their revenue came in the back half. So they turned something around, something to keep an eye on if you are interested in Coors. I would most likely buy a big dip on Coors with the upside and a good yield. That seems to be fairly stable. Those are just my opinions on the two companies. Well, ladies and gentlemen, I hope you enjoyed my dive into both Coors and Anheuser Busch. Both good companies, just depends on how you want to play it. If you're more a safe and steady guy, I think Bud is your bet. But if you are more risk adverse and you want the upside, well, I think you got it in Coors. So guys, I think both are winners today. I'm not a huge fan of either one. I wouldn't say bet the house on either one. But for a reopening play and a catch-up play, I like both of these stocks to do extremely well next year. I don't think you have to take on the risk of the cruise lines and airlines, as they have tons of debt and very expensive to run, while the beverage play, the alcohol beverage play, seems to be a safer, steady play that does have as much upside because of the reopening. Well, let's be honest. What are people going to drink on these cruises? What are people going to drink on these flights? might have a product like a Coors or a Bud on board. I feel that these two stocks here could give you as much upside as the airlines and cruise lines without the risk. As always, guys, I appreciate your time. Thank you so much for spending it with me. I hope you enjoyed my quick dive into Coors and Bud. And as always, hopefully you finish the week green, and we will see you next time, investors. Peace.